Sometimes the FHA loan gets a bad rap. Is that fair? Dispelling the myth. Here are the differences between an FHA loan and a conventional loan. FHA loans are not all bad. Let me tell you more. If you want to hear more awesome mortgage advice, what to know and not know in the mortgage world, like, subscribe, and of course share our videos with others. We'd love to have you be a part of learning more about the mortgage industry on a weekly basis. Michelle Oddo with the Oddo Group at Luminate Home Loans. What is an FHA loan? An FHA loan is a loan that is backed by the government, and there's some really great things about an FHA loan and some things that you have to be aware of if you are going to do an FHA loan. So first of all, an FHA loan, some of the advantages are you only need 3.5% for a down payment. That's right, just 3.5%. So that sounds fabulous, right? And the other thing about FHA loan is you can have a higher debt ratio. It's a much more lenient program. So the income, your debts versus your income can be higher on an FHA loan than it can be on a conventional loan. So that's also really good. Another thing about an FHA loan is typically if you have a lower credit score, like a 620 or a 640 or a 660, and you're putting a limited amount of money down, so again, the 3.5%, or on a conventional, if you were comparing, maybe 5%, the PMI and the interest rate on the FHA loan on those lower credit scores is going to be much lower than it would be on a conventional loan. And the reason is it's backed by the government. So they're able to insure that loan and share the risk versus like a conventional loan. Fannie Mae and Freddie Mac, they have a lot of additional fees on those higher loan to value, lower credit score deals. And the PMI is higher on a conventional loan with a higher loan to value, lower credit score deal. So typically, if we're looking at an FHA loan and a conventional loan, and we have somebody with a limited down payment, 3.5% or 5%, and they have a lower score, again, like 620, 640, 660, the FHA loan will always have a lower rate and lower payment. It just does. So that all sounds fabulous, right? Why wouldn't everybody do an FHA loan? Well, here are some of the negatives to an FHA loan. With a conventional loan, if you put 20% down payment or more down, you will have no PMI. On an FHA loan, it does not matter. If you put down 10%, 20%, 30%, whatever, you're still going to have PMI. And the reason is, the rule of thought is if you need an FHA loan, you probably have something that's a little bit higher risk than you would have, or else you'd be going on a conventional loan. So what are those things? What does an FHA loan do that a conventional loan won't do besides the lower credit score and the higher debt ratio? Well, it might be time of bankruptcy seasoning. Conventional allows for a shorter seasoning on bankruptcy than a conventional loan. You can have 2 years instead of 4 years. It could be time of foreclosure. On an FHA loan, it's 4 years instead of 7 years. It could be the way that we're looking at the student loans. It could be the way that we're calculating income. There just are things about an FHA loan that are a little more lenient than a conventional loan would be. So there could be very many reasons you'd go FHA even with a bigger down payment, even with a higher credit score. Again, maybe you had a bankruptcy and you don't qualify for a conventional loan yet because of the timeline, but your income and credit are good now. You might have to go FHA to get into that home. So the other thing with FHA is you will always have PMI, as we mentioned, and it doesn't fall off like it does with a conventional loan. So with a conventional loan, after you hit about 80%, 78% of the original value, that PMI will automatically fall off. It just falls off by law. But with FHA, it does not just fall off. The thing with an FHA loan is sometimes people go into those loans. They're a great loan, like I said, for the right people, with the intention of either living in a house, 3 years, 5 years, and then selling it, or refinancing that loan down the road into a conventional loan. So it might be just the perfect loan to help you get into the home, but not necessarily the loan you're going to keep for life. That might be another reason. Again, comparing FHA to conventional, lower rates, lower PMI for those low credit scores. You only need 3.5% down payment. You can have a higher debt ratio. You can have some more credit issues than you could have on a conventional loan, but you are going to have PMI for the life of the loan. And you also, on an FHA loan, are going to have an upfront PMI premium. So FHA HUD will charge a 1.75% of the loan amount will get financed into that loan. It's not an out-of-pocket cost, but it will get financed into your loan, meaning your loan amount is going to be higher at the get-go on that FHA loan than it would be on the conventional. Conventional does not have their PMI load in an upfront premium like that. So those are the biggest differences in an FHA loan. Some of the other maybe negatives I would say, or things that a realtor may not love about an FHA loan, are the appraisals can be a little more stringent on the property condition. So if there are health and safety issues, if there are broken windows, if there is exposed wiring, those would maybe not get called out on a conventional loan, but on an FHA, they will require the seller to fix those items. The other thing is, if it doesn't appraise at the asking price and it's a purchase, that appraisal sticks with that property for quite a while. For the next buyer that comes along, they would have to use that same appraisal if they also were doing an FHA loan. So those are two things that sometimes realtors don't love about an FHA loan, but outside of that, it's a fantastic loan. It's a great first-time home buyer loan, although you don't have to be a first-time home buyer to use an FHA loan. Anybody can use an FHA loan. It could be your 10th home, and you can do an FHA loan. Now, if you're doing down payment assistance with FHA, there are sometimes restrictions around that. But other than that, don't have to be a first-time home buyer. There's no income limit restrictions, none of that. You can do anything you would do on a conventional loan on that FHA loan outside of loan limits. Sometimes the FHA loan limits are a little bit lower in certain counties than they are on a conventional loan. But you can always Google that, FHA county limit, in your county, loan limit. We would love to help guide you. And, the thing that we do here at the Oddo Group is we're not order takers. We try to come up with solutions that fit your needs, that maybe you don't even know about, and at least provide you with some different options or solutions so that we're structuring the right loan for you. Michelle Oddo, the Oddo Group at Luminate Home Loans. Give us a call. We'd love to tell you more about FHA loans. Thank you.